Mastering international trade. Effective risk management strategies are the only safeguard against catastrophic disruptions in global trade. How do we currently design and implement effective risk management strategies, including insurance policies, to mitigate potential risks and ensure the smooth flow of goods and services across international borders in our operational excellence pursuit within global trade activities? To design and implement effective risk management strategies, including insurance policies, to mitigate potential risks and ensure the smooth flow of goods and services across international borders in our operational excellence pursuit within global trade activities, the following approach can be taken. A risk identification and assessment. Conduct a thorough risk assessment to identify potential risks associated with international trade, including but not limited to logistics and transportation risks, e.g., natural disasters, cargo theft, damage during transit. Compliance and regulatory risks, e.g., customs clearance, import/export restrictions. Financial risks, e.g., currency fluctuations, payment defaults. Political risks, e.g., trade wars, sanctions. Supply chain disruptions, e.g., supplier insolvency, natural disasters. Use tools such as risk matrices and SWOT analysis to evaluate and prioritize risks based on their likelihood and potential impact on the business. 2. Insurance policy strategy. Develop a comprehensive insurance policy strategy that addresses the identified risks, including marine insurance to cover cargo loss or damage during transit. Liability insurance to protect against third-party claims. Cargo insurance to cover goods while in storage or in transit. Political risk insurance to protect against government actions or inactions. Supply chain insurance to cover disruptions to the supply chain. Ensure insurance policies are tailored to the specific needs of the business and aligned with the company's risk tolerance. 3. Risk mitigation strategies. Implement risk mitigation strategies to reduce the likelihood or impact of identified risks, including diversification of suppliers and logistics providers to minimize dependence on a single entity. Development of contingency plans for potential disruptions, e.g., natural disasters, supplier insolvency. Implementation of robust quality control measures to ensure product integrity. Regular monitoring and analysis of market trends and changes in regulatory requirements. Establishment of emergency response plans for unexpected events. 4. Compliance and regulatory management. Implement a robust compliance and regulatory management program to ensure adherence to international trade regulations, including customs clearance and trade compliance, import/export regulations and restrictions, sanctions and embargoes, free trade agreements and trade preferences. Establish a system for tracking and monitoring changes to regulatory requirements and updates to trade agreements. These supply chain visibility and transparency. Implement a supply chain visibility and transparency program to monitor and track goods in transit, including real-time tracking and monitoring of shipments, end-to-end visibility of the supply chain, regular updates on shipment status and any changes to the delivery schedule, access to shipment tracking data for all stakeholders. VI. Risk monitoring and review. Establish a risk monitoring and review process to regularly assess and update the risk management strategy, including regular review of risk assessments and insurance policies, monitoring of risk indicators and early warning signs, update of risk mitigation strategies and contingency plans as needed, review of insurance policy coverage and limits. By implementing these measures, companies can design and implement effective risk management strategies, including insurance policies, to mitigate potential risks and ensure the smooth flow of goods and services across international borders, thereby achieving operational excellence in global trade activities.